What up, YouTube? I'm back. I got another video for you. This is day number 5. Day number 5 on the streak right now. So we hot. I'm trying to keep it going. I'm gonna get right into it. Alright, so we're gonna start off here on a 4-hour ES chart. First thing I want to point out, first thing I want to say is the markets only go up for two reasons. For liquidity based in the form of a swing high, or to balance imbalance prices in the form of a volume imbalance or a fair value gap. So the same is for when the market go down. The market only goes down for two reasons: to either touch liquidity in the form of a swing low, or to balance inefficient prices in the form of a fair value gap. So swing lows, swing highs, and fair value gaps. That's the only thing that makes the market go up or down. So right here, where I got this circle at and this arrow, those were the premium prices because that's the swing high on the 4-hour time frame. It's a lot of orders up there. Long story short, where we are right now, as far as market structure, all the way over here, higher high, higher low, higher high, higher low, higher high. The next prices that are very valid are these 4-hour premium prices in the form of a swing high. So this swing high right here, this is very valid. And then above this swing high, you got another swing high right here. And then you also got another swing high right here. But the most valid prices, the most important prices above all three of these prices is this fair value gap up here, this fair market value. This is a fair value gap. So that's what I got marked out. I got this line right here is a 4-hour fair value gap, 4-hour premium swing high. All right, so here I just zoomed in on the 4-hour ES chart. We continued 4-hour bullish market structure today during Asia, while also not trading below the Asia low 2 sessions ago. So if y'all watched my video from a couple days ago, these prices right here were the unswept low prices for the Asian session during 4ES during the Asian session. So these prices were never swept. Like, prices never traded below these prices, but on the NQ they did. So 2 days ago, which was on the Friday, right? Last Friday was the divergence for me automatically. Once prices traded below here, the low of Asia prices on the NQ, once they didn't trade below it on the ES, that was automatically the divergence. So 2 trading days later, which marked out by these session breaks right here, right? 2 trading days later, we're continuing bullish market structure. So this is the first high. This is the lowest low point. After that, it's the second high, second lowest low point after that, third high, low, higher high. So the candle right here, which I got marked out 18 o'clock, that was 6 o'clock, the new trading day yesterday. We made higher prices and continued 4-hour bullish market structure. That's important. Remember that. So yesterday on the ES, we continued to make higher we continued bullish market structure. So yesterday, while the ES continued 4-hour bullish market structure, NQ didn't until today during the Asian session. So yesterday, which this arrow was marking out the highest point from yesterday's trading session, right? Even during and after New York, this was like the highest price. And actually, New York put in that price. Long story short, these prices right here that I got marked out is the 4-hour premium swing high / fair value gap. in order to continue 4-hour higher time frame market bullish structure, right? We would have had to trade above these prices. Yesterday we did on the ES, but yesterday we did not on the NQ. That's another divergence coupled with, pay attention to the last slide in my last video. I said this was the Asian session low right here. These prices got purged. They swept below these prices. On the ES, we didn't. So we got two divergences going on right now. So following market flow, right? And market structure, right? Today, during the Asian session, we had a big push up. The Asians came in and they just came in there and just pushed the market all the way up. So when on the NQ, the market opened up and the Asian session at 6 o'clock just pushed the market all the way up through the roof, that's this price run right here. This is the ES. This is the session break right here where this line is at. This was 6 o'clock. So a little after 6 o'clock, probably about 2 hours later, 2-3 hours later, Asians kicked in and the market just jumped and pushed all the way up, real aggressive and hard. And this was on a higher time frame, continuing bullish market structure. Then during the London session, during the London kill zone, right before it or maybe during it, I don't know exactly the time, the market sold off hard. So the narrative right now is bullish market structure. We're trying to buy the market. And if we follow all of this market structure or this price action right here, right, the market traded down and then traded back up. This candle right here was where I got in. Prices went into a deep discount or sold at a time where prices were nowhere near what I would consider a premium. So these 4-hour premium swing high prices right here, these are the same prices that I showed you in my other slide. I'm going to go back to the first slide. These prices right here. So this blue line, this swing high right here, that's what the prices are marked out. All right, so at 11:33, this big sell-off right here, prices went into a deep discount. Were sold at a time where prices were nowhere near what I would consider a premium. So when the market sold off real hard right here, these were like short-term liquidity pools that the market came and just wiped out all in like 1 or 2 candles. And this is the 1 minute time frame. So I bought inside of these prices inside of here, and I just wrote it up. But yeah, that's the video. Get up out of here.